Hello everyone, and welcome to our market alert video for today, which is March 14, 2025. I hope this video finds you healthy, wealthy, and wise. We're going to talk about the biggest drop we've had in many years in the consumer confidence numbers that came out this morning, and what that means to our investments. Are we headed for recession? The stock market has been falling like a stone here for the last 2 weeks. So we're going to kind of talk about all of that with you. But before we do, let me introduce myself. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And we have a singular goal, which is to create as many squippers as we possibly can. I'm proudly wearing my Squipper shirt today. And if you're wondering what SCWPS stands for, it's the acronym for Second Childhood Without Parental Supervision. So when one of our clients retires, we call them a SCWPer, and we tell them, get out of here. Stop bothering me, okay? Go play, have fun. Let us worry. Let us get the gray hair. Let us worry about this for you so that you don't have to. So thank you for watching. And so let's talk about what happened. So the drop in consumer confidence went from 64.7 to 57.9. That's a significant drop. I mean, it's one of the biggest in years. And so because consumers represent 70% of our economy, if they lose confidence and stop spending, that could be really bad. We could have a bad recession. We could have a stock market go way, way down. So we want to pay attention to how the consumer feels. Now, it's still 57.9, so it's still a good number. It's not a bad number, but it's the change that's attention getting. And so we want to keep an eye on that and make sure that we're ready in the event that this does turn into something worse than it already has. Now, the thing about this that drives me crazy is they looked at, in addition to the fact that we had, the consumer confidence drop like that, they looked at who lost confidence. And I wish this would just stop, okay? But everything in our country, it seems, has become political, okay? Because what the numbers show is that the drop is primarily with Democrats and independents. They are the ones that have seen their confidence drop the most. Republicans, for the most part, are feeling confident. So even consumer confidence numbers are now driven by politics. Insane. Now, the important thing is it doesn't matter your politics. If you stop spending, it hurts the economy. So we have to watch that number. Now, our strategy, as you guys may know, we have a strategy we call Invest and Protect. And it is designed to help our clients to avoid large losses. Because, as our name implies, we work with people who are over 50, who are retired, or who are retiring soon. So there's two things that we do. One is diversification. And the other is we have a strategy to actually sell and get out. We don't believe in buy and hold. We think that's an incomplete strategy. We think it's buy, hold, and sell. We think that all three of those are important. So on the diversification front, the stock market, the S&P 500 index, is down, as I record this, about 4% from the beginning of the year, not from the peak, but the beginning of the year. But if you look at international stocks, again, as I record this, they're up about 8%. The bond aggregate, which is, the government bonds and those kind of things, are up 1.5%. So again, this is a year where diversification is actually working to mitigate the downside of what the stock market is delivering. So again, with our clients, we want to be diversified, but we also want to have suspenders and a belt. So the suspenders are diversification. I want to talk with you now about the belt, which is having a strategy to protect against the downside. So what I want to do here with you for just a moment is I want to share with you what we call our investment principles. So our investment principles are what guide us in terms of making decisions during turbulent times, during terrible economic periods, and also guides our philosophy. And the reason why having principles is so important in our view is that you don't want to be making big decisions in the middle of a crisis. You want to have thought about what you will do in a crisis in advance. Okay, we're financial planners, retirement planners. We're not retirement reactors. Okay, we want to have thought through what we're going to do in advance. And so our philosophy, because we work with people who are over 50, who are retired or retiring soon, is number one, we're committed to having your money last as long as you do. Okay, so if your thought process, if your philosophy is you want to have your money last as long as you do, then suddenly you've changed from growth at all costs, risk, all of that. Suddenly it becomes important for you to start thinking about protecting principal, which is why we have our second investment principle, which is growth is important, but protection of principal is more important. Okay. If you're going to live on your money for the rest of your life, you need that money to be there for you. So protecting it, we think, is more important than growth. Growth is important, but protection of that principal is even more important. And so that's why we have our strategy, which is that if we reach a point where the market is bad enough, the momentum is bad enough, and the indicators that we look at tell us it's bad enough, we want to get our clients out of harm's way. And our strategy did tell us to sell in November of 2007, to stay out for all of 2008 during the credit crisis, and even till June of 2009. So we missed out, or our clients who followed our advice missed out on stock market losses. From peak to trough, the S&P fell 57% during the crisis. Our strategy also said to sell the day before the pandemic was announced. And as you guys know, they shut the economy down and the stock market went down close to 40% after that. So we want to protect against big, bad bear markets. And so that's why we have a strategy to address that. Now, as I said, our strategy has not told us to sell yet, but it could. We're close enough to it that one or two big bad down days could get us there. But as of right now, we still think that we won't hit our sell signal, and it's likely that it might bounce back from here. So there you go. Have a strategy that you have the discipline to apply and follow, and you don't react emotionally or with fear or with greed, all those things that cause many investors to make decisions that they otherwise wouldn't. And so have principles behind your investing. We do. We encourage you to come visit with one of our retirement planners to build your retirement plan if you're so inclined, and to learn more about our invest and protect strategy as well. So thanks for watching this video. I hope it found you healthy, wealthy, and wise. Please like and subscribe it. It helps us tremendously if you would do that. And if you would, I'd be very thankful. And share this video with your friends as well. And we'll talk soon.
Retirement Planners of America.